a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Trump trade. These are the areas that could benefit or lose if President Trump returns to power. And we know that the chances of President Trump returning to power, the odds have gone up after the attempted assassination at a Pennsylvania rally last weekend. And so we have seen that investors have started favoring areas that could benefit from his return to power. So let's take a look at the policies, and then we will talk about some ETF areas. So President Trump has talked about higher tariffs, particularly on Chinese imports, and that could be inflationary, and that could also potentially hurt some chip stocks like Nvidia, like Supermicro. That is why we have seen some pressure on these earlier high flyers. These were among the top performing areas of the market earlier this year. Then he favors lighter regulation, and that lighter regulation could benefit health insurance companies and financial services companies like banks. And we are likely to see extension of corporate and personal tax cuts that could result in increased budget deficit and more government borrowings. And that is why we have seen that long-dated bond yields have risen lately. And since the odds of a Fed rate cut in September have also gone up significantly over the past week or so, that is why we have seen steepening of the yield curve. Republican Congress could increase defense spending. Now, the impact on defense contractor is slightly mixed because we could see a cut in Ukraine aid, and these defense companies had benefited a lot because of the war in Ukraine and aid that the U.S. government provided to Ukraine. So if that is reduced, then short-term outlook for defense contractors is negative. Over the longer term, they could benefit. Trump is pro-cryptocurrency, and in fact, he's scheduled to speak at a crypto conference in Nashville later this month. So we have seen cryptocurrencies. Bitcoin has surged over the past week or so. We could see looser clean energy and environment-related regulations. That is why we have seen a lot of pressure on clean energy, solar stocks lately. He favors more drilling, that so we could see more fossil fuel production in the U.S. If he is back in power. So that will benefit consumers because energy prices are likely to go down, but it could be negative for energy stocks in general because there is too much fossil fuel production in the US. Tesla and EVs has been interesting. So Tesla shares have rallied and they have been rallying for the past few weeks. I will talk about the reasons in a little bit. But Elon Musk, he endorsed Trump recently. And so that is why Tesla stock could benefit from a Trump presidency. But EVs in general, not likely because their subsidies could be eliminated. So this is going to be interesting. Now let's take a look at some ETF areas. So Bitcoin ETFs could benefit. In fact, we have seen a surge in these Bitcoin ETFs. So if you want to take a look at Bitcoin ETFs, maybe take a look at the most popular one, IBIT. This is the fastest ETF to reach $20 billion in asset has an expense ratio of 25 basis points, but with some waiver it could be lower. So we'll take a look. Has over 20 billion in assets now. And Fidelity's ETF FBTC is also worth a look. Now let's go to the quote page on Zacks.com for IBIT. And you can learn more about this ETF by reading our articles, research report. You can go to iShares webpage for this ETF. So this has an expense ratio of 25 basis points, but fee will be 12 basis points for the first 12 months or the first 5 billion. And all investors will get a weighted average of these fee rates. And after the 12-month waiver period is over, the fee will be 25 basis points. So very reasonably priced. One of the best ways to get exposure to Bitcoin. Now, another area that is worth a look is bank ETFs. So bank ETFs, obviously, they benefit from lesser regulation. They also benefit from a steeper yield curve, which we are likely to see. And this yield curve has been steepening over the past few days. We could also see more mergers and acquisitions in this space because of lower regulation. So this ETF, the Spider S&P Bank ETF KBE, is worth a look, has 1.8 billion in assets, expense ratio of 35 basis points. So let's take a look at the CT ETF by going to the quote page on Zacks.com. So you can learn more about this ETF, and you can also look at the holdings. So Bancorp, Exos Financial, Bank United, all these banks, Comerica, these are among the top holdings in this ETF. And the third area that I'm highlighting is Tesla ETFs. So Tesla has been very interesting. So Tesla shares have been surging. Earlier, Tesla was the only ETF, only stock among the Magnificent Seven stocks which was in losses. But Tesla shares have staged a massive turnaround after the company announced that its Q2 deliveries were not as bad as feared. And then last month, Tesla's shareholders had approved the multi-billion-dollar compensation package for Elon Musk. And the deal was passed earlier in 2018, but was voided by a Delaware judge last year. And then shareholders also approved a proposal to relocate Tesla's incorporation from Delaware to Texas. And this was important because board thought that it is important to keep Musk incentivized at Tesla because he is juggling 5 companies. Now, Tesla bulls were focused on the robo-taxi event, which was earlier scheduled for August 8th, and now it has been, Bloomberg reported that it has been postponed to October. So we'll keep an eye on Tesla and Tesla ETFs. This particular ETF, Direction Daily Tesla Bull ETF TSLL, which provides 2x daily exposure to Tesla, has 2.2 billion in assets and charges 96 basis points. That has seen a lot of interest from investors lately. Again, you can take a look at this ETF, and Direction also offers a Tesla Bear ETF TSLS. But these leverage ETFs, they are not meant for long-term holding. They should be used only for short-term trading purposes because they are expensive, and all this because of this daily rebalancing, the longer-term performance could be quite different from daily stated goals. This is something which investors should remember. And areas that investors have been avoiding in particular are China ETFs and solar ETFs. solar and clean energy ETFs, they have seen significant outflows and they have plunged. So China ETFs like KWEB, MCHI, and solar and clean energy ETFs like DAN and ICL and have seen significant outflows over the past few days, and they have also plunged in value. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. And also make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.